Shri Gurubhyo Namaha children, you're in Unit 2, Entrepreneurial Planning, and you're in Joint Stock Company. And previously we saw what is Joint Stock Company, what are the definitions of Joint Stock Company, and what are the characteristics of Joint Stock Company. So a Joint Stock Company is a voluntary association of individuals having capital divided into transferable shares. It's a voluntary association. It is an artificial person created by law. It has a separate legal entity and a common seal, and it has a limited liability, and the shares of the company are transferable. So in a private company, you can have a minimum person of 2. Minimum people members required in a private company is 2, maximum is 50. And in a public company, it is 7, and the maximum limit is unlimited. And now we are going to see what is the suitability. So when can you start a joint stock company? Now, if your capital is very limited and if you are going to start a small business, then this joint stock company is not applicable. So when will you require a joint stock company? See, joint stock company is normally you will start this type of a company when the venture is heavy and it is of basic industry type, and it has a large scale operations, and business requires huge fund. Then enterprise involves heavy risk. Then enterprise is technologically complex and sophisticated, banking heavily upon the experts and professionals. So for this type of business, you will definitely require a joint stock company. Now, when you're going to start a joint stock company, there are a lot of rules and regulations you have to follow. Just like that, it's not a petty shop, or it's not a fancy store, or it's not a provision store. Just like that, you can go and open a store. Now, to commence a company in India, now, first of all, the concept of the company is born in the mind of the entrepreneur. So they investigate the potential and take a lead for bringing human resources, money, material, machinery, and methods together for conceiving his or her dream. So first they conceive the idea, they scan it against the environmental force to establish its feasibility, means possibility and viability. Then it procures the resources essential for its commencement, ensures the incorporation of the enterprise, arranges for commencing of the business, and plans out an expansion and diversification strategies. What are the strategies? They will plan. Okay, because they're going to pull in a lot of money into the business. So just like that, it's not that tomorrow you want to open a company, you can open it. No, you have to do a lot of legal formalities. So the legal formalities expected to be complied by the entrepreneur. A heavy responsibility rests on entrepreneur in translating his idea into working reality. The spheres of activity done during this stage is very wide encompassing. Now, first of all, they should obtain a PAN card. What do you mean by PAN card? PAN card is a permanent account number, and it is a 10-digit alphanumeric number issued by the income tax department. Now, if you go and deposit 50,000 above, they will ask you for a PAN card number. If you withdraw more than 50,000, they will ask you for a PAN card number. So if you are a businessman, definitely you should possess a PAN card. Not only business people, those who are paying tax. Okay, so PAN card is very, very essential for them. So PAN card enables the department to link all the transactions. So with the PAN card, they'll be able to find out, they can find out all the details, like where you're having a account, what is your income. So these transactions include tax payment, TDS and TCS credits, return of income, wealth, gift, FBT, then specialized transaction correspondence, and so on. So PAN thus acts as a identifier for the person with the tax department. So it is mandatory to put PAN in all documents pertaining to financial transactions. So they'll ask, bring your PAN card. You have, now that the new rule has come, you have to merge the Aadhaar card with your PAN card. Then merge your smart card with your PAN card. So that they make sure there's no cheating taking place, there's no two cards issued, no two person is using the same Aadhaar card and smart card and all that. So who must have PAN card? All existing assessees or taxpayers or persons who are required to furnish a return of income even on behalf of others must obtain PAN. Any person carrying on any business or professionals whose total sales, turnover or gross receipts or is likely to exceed 5 lakhs rupees in any previous year. So any person who intends to enter into financial transaction where quoting PAN is mandatory must also obtain PAN. The assessing officer may allot PAN to any person either on his or her own or on a specific request from such person. So PAN card is mandatory for a person who is starting a business. Now he should have an account. An account means what? Current account. In the bank, you can have a saving account, you can have a recurring account, you can have a current account. Normally, a person will have a current account. Now, what do you mean by current account? Current account is like, for example, they will give you a bank will give you an overdrawing facility. For example, your account is only 4,000 rupees, but you have issued check for 5,000, 6,000, 7,000, maybe up to 2 lakhs you have issued. So you should get this overdrawn facility. Current only business people normally they will have current account. So even yeah, if your the availability of funding your account is very less, you can overdraw. Overdraw means what? Like when your customers they put the check that you have issued, it will be cleared. Now imagine if your check is not cleared, you will have a bad reputation in the market. Now, for example, you issue a check to A and it's bounced. So this A will go and tell A with B, C, D, E, F, G, H, whomever possible, don't do business with this man, his check is getting bounced. So to avoid that, you will have a facility with the bank. So you'll have a current account, which is our overdraft facility, 15 days, 20 days, according to your balance sheet and according to your financial strength, the company will give you a current account with some 2 lakhs, 3 lakhs, 4 lakhs limit, whatever limit, according to your business. So any person can open an account in his or her name, or it can be a joint account. It can a sole proprietor, a partnership firm can open an account, a private limited company, a public limited company, joined into family, trust, club, association, schools, everything. It's an organization. They can open an account in their name. Even a minor can open an account, provided he is able to read and write their name because he needs to sign. So we saw the basic common documentation, for example, proof of PAN card, voter ID, passport, driving license. Then for the address, they'll need your latest telephone bill, electricity bill, etc. Now let us see what all you need if you are starting a public company or a private limited company. What are all the documentation that you will require? You will require a certificate of incorporation and commencement of business. After you go to the registrar of companies and you submit the documents necessary, okay, your prospectus, your memorandum of articles, all those the documents after you surrender, they will give you a certificate of incorporation. So the board resolution authorizing the opening and operation of the account, PAN or GIR number. Now, what do you mean by GIR number? Do you know what is GIR number? GIR number is the General Index Registrar number given by the accessing officer. He gives you the GIR number or the it is necessary that you have a PAN card or a GIR number. So a list of directors with residential address. All this should be there if you are starting a public company or a private limited company. Now register your company, private limited or public limited company. The following steps are involved in incorporating a private or a public. To start a company, incorporate, to commence a business, you have to have all this. The name of the business entity should be your own name only. You cannot copy somebody else's name. Register for e-filing at MCA, that is Minister of Corporate Affairs. Then apply for Director Identification Number. Then obtain digital signature certificate. Then register DSC at MCA website. Apply for approval of the name of the company. Formulate memorandum of association. Formulate articles of association. Verify stamp. Sign articles of association. Verify the various forms required for incorporation of the company. So all the to register into the company, to register your name, to start a company, you should comply with all these formalities. Okay. Now see, then register for service tax. Now service tax is not there, VAT is not there, and you don't have sales tax, you don't have excise duty, you don't have all this, you don't have at all because after the presence of GST, now this is being removed. Okay. Instead, you have something called as instead of all these indirect taxes. Now register service tax. Service tax is actually an indirect tax. Instead, you have goods and services tax. What do you mean by goods and services tax? In simple words, goods and services tax is an indirect tax levied on supply of goods and services. This law has replaced many indirect tax laws that previously existed in India. GST is one indirect tax for the entire country in case of intrastate sales, central GST, state GST are charged. Now next. Now what do you mean by SGST? SGST is the SGST, that is the state collected by the state government, the tax collected by the state government. Then CGST is collected by the central government. IGST is an integrated GST that is collected by central government. Okay. Now you see, the goods and services tax is a value added tax levied on most goods and services sold for domestic consumption. The GST is paid by the consumer, but it is remitted to the government by the business selling the goods and services. In effect, GST provides revenue for the government. What is CGST? The Central Goods and Services Tax refers to the tax levied by the central government on the transaction of goods and services. The tax collected under the head is called as CGST and is payable to the center. Next you have SGST. SGST means a state goods and services tax, one of the three categories under the goods and services tax. That is CGST, IGST, and SGST, with the concept of one tax, one nation. So CGST falls under State Goods and Services Tax 2016. For easy understanding, CGST is being introduced in the present state taxes of sale tax, VAT, luxury tax, entertainment tax, unless it is levied by the local bodies. Taxes on lottery, betting and gambling, entry tax not in lieu of octroi, stakes, taxes, and surcharges insofar as they relate to supply of goods and services extra are subsumed. That means it is not there. So revenue collected under SGST is for state government. Now what do you mean by IGST? Now, IGST means Integrated Goods and Services Tax, one of the three categories under Goods and Services Tax. With the concept of one tax, one nation, IGST falls under Integrated Goods and Services Tax Act of 2016. So, it is charged when the movement of goods and services from one state to another. For example, if goods are moved from Tamil Nadu to Kerala, IGST is levied on such goods. The revenue out of IGST is shared by the state government and central government as per the rates fixed by the authorities. So I hope you understood that. Okay. Now